Hey, what's going on, guys? So in this video, I want to show you a very unique option position that I have recently opened up, and it's made pretty good money. I made $700 in just the past couple of days. Now, this is a four-legged option trade that is bearish because the market currently is very volatile. Stocks have been down, and honestly, after looking at what happened to Netflix, I was thinking that something similar could happen to Facebook. So I called out this play on the private Discord a couple of days ago, and so far we're up $700. And I want to go over this position just in case you see another opportunity in the market where you want to open up a similar position, or if you're just bearish on a stock. I want to show you a very good way to make really good money. I mean, $700, and this position was only $2,500 worth of capital that I opened up. So anyways, I first want to show you technical analysis on Facebook. Basically, Facebook has had a very big sell-off. I mean, a huge sell-off. And if I go to the 6-month chart right here, I do typically like to look at the 6-month chart. It gives me a lot of information. That is the most important period for me personally, because while I was working at Goldman Sachs and a couple of different hedge funds on Wall Street, I did realize that a lot of investors were using this time frame. So for me, 6 months is very important, and that is what I typically teach Discord students. So 6 months is what I'm using. And if you take a look here, Facebook had a complete nosedive from about $323 per share all the way down to $220. Now, I started getting really interested in the stock. I didn't quite buy the stock yet, but I do believe that we are going to go back up to maybe about $300 per share in the next 12 to 24 months. But in the short term, we may see some pain. I mean, absolutely, because rates are going up. There's a whole lot of catalysts in the market right now, and there are a lot of fear, uncertainty, doubt. So that's basically why I went bearish right here on Facebook recently. But essentially, if you take a look right here, it had a little bit of a double bottom pattern, which did form, and it seemed to be very true. $187 and again about $186. The stock ended up recovering back above $200 per share, but recently just the entire market is selling off, and Facebook is reporting earnings this week. In fact, a lot of stocks are reporting earnings this week, so you can still use the strategy that I'm going to teach you on Facebook and just use and mimic this strategy to make money on a different stock that's going to report earnings that has a high likelihood of falling. Okay, so after looking at Netflix, I thought that Facebook can continue falling down, even though this is a complete value play. I mean, when I looked at the summary for Facebook real quick, the price to earnings ratio is 13. The general market is about 20, okay? So this is a very big discount. In fact, it's about a 35% discount from the $20 or the 20 PE ratio of the entire market. And this is Facebook. I mean, they are supposed to continue to have good growth. They have very good margins, and this company is now under $500 billion, which is pretty insane because this company was pushing $1 trillion valuation not that long ago, okay? And many one-year price targets are still around $300 per share. If I scroll down, you can see that the revenue is growing, earnings are still growing. They are doing a bunch of funky stuff with the metaverse. I totally understand. There's a huge risk. That's why I'm currently bearish in the short term, but I'm bullish in the long term, if that makes sense. As you can see, the average price target is $314. And even on the low end, it's $195, but still in the short term, I'm going to show you this play that I made $700 on. But again, I want to quickly show the technical analysis. This is very important when you're picking stocks, okay? So right now you can see if I scroll into about the 1-month chart right here. So on the 1-month chart, this stock has gone down to $180 per share. Pretty insane because I already thought it was about a bargain under $190. After hours, you can see here $175, which means actually when the market opens up, I'm making this video before the market. When the market opens up, this is going to be a whole lot more. And I mean a whole lot more. It's probably going to be a couple $1,000s. So basically, I've helped the Discord students double their money. This is a play that I made just a couple days ago. In fact, let me take a look when I opened up. On April 25th, I'm recording this on the 27th. So 2 days, literally 48 hours from $2,650. We'll see what it opens up at, but I'm going to guess it's going to open at around $5,000 total market value. So I'm going to have a very big gain here. And again, I opened up 4 different option positions, which I'm going to discuss. I'm going to show you how to open up this very position on maybe Facebook or a different stock. But again, real quick, if the stock continues to go down, it's already at the bottom of the Bollinger Band. Look at this volume right here. These are the volume charts, okay? Big red, you know, a little bit of a small red. Then we had a little bit of an up day, okay? People thought that finally maybe the sell-off is over, but no, completely, we were all wrong. And it looks like, you know, we're gonna have a cup formation here where basically we're gonna start seeing a recovery, but nope, it didn't happen. And now we're going to have another red day, and likely, you know, we can actually look at the market today. We may have an up day, but Facebook as a whole probably reported not so good earnings. Let's actually take a look right here. If I go into the Robinhood platform and I click Facebook Facebook. It's down pre-market. I'm guessing that the earnings were not fantastic, and that's probably available today after hours. So this is going to be a great position for some people to open up today, potentially. But, you know, obviously I made this play 2 days ago, so we've already made money there. Okay, so the position that I opened up, okay, it's basically two different spreads, okay? It says a custom order. Let me click this custom order right here. So the first thing that I did was because I was bearish on Facebook, okay? I was bearish. I thought that this stock would fall. You know, I opened up the position when it was about $185 per share, about $10 ago. And now, you know, I basically opened up the 185 put. That was an at the money, okay? Because it was $185. I bought puts, but instead of buying puts for $12.32, I mean, that's a lot of money. Because again, remember, each option is 100 shares. This is $1,232. I know some of you guys have small portfolios. Don't worry. I'm in here for everyone. The small guys, the medium guys, the big guys, especially the small guys, because I want to help you get a bigger portfolio so that you can join me in the Discord community. But first of all, we got to make you some money, okay? And right here at $1,232, that's a big portion of a lot of people's portfolios. If you have $2,500, this is 50% of your portfolio. Come on now. That is a really big portion. You don't want to do that. It's not very smart risk management, because basically you want to have each position be, you know, 8 to 10% of your portfolio at a maximum. If you're opening up 50% positions, you are asking for problems, because if Facebook, for example, doesn't go down, you bought this put option, you're going to end up losing your money. And guess what? You're going to have a hard time closing this position also, because it's going to move up pretty fast and you're going to close it for a big loss pretty quickly, because after earnings, you're going to have something called IV crush, or implied volatility crush. The IV right now is really big before earnings. And again, if you're watching this in the future, you can just run this strategy on a different stock that's going to have earnings in the near future. But basically, Facebook has earnings today. So when you open up this position after earnings, and if it doesn't go in your direction, you're going to lose a good amount of this money. So instead, what I did was I opened up this put. I bought this put for this amount of money. Then I actually ended up subsidizing or helping myself and reducing the cost, and way reducing my cost by a lot of money, by collecting $782. Now I brought down my cost down by more than 50%.
Amazing.
Amazing. And that's because this is called a debit put spread. This is a debit put spread, okay? Or a bear put spread. Basically, I'm betting using puts that the stock is going to fall down. So rather than just buying a put option and spending all this money, I'm now actually buying a 185 put and then selling a 175 put, collecting some premium, making $782, subsidizing or reducing the cost of this current position. But that's not where I stopped, okay? This is where things get really interesting. I'm betting on the stock going down by buying a debit put spread, or by buying a bear put spread, okay? But then I went a step further, okay? I think that Facebook has a high chance of going down, but maybe sometimes you see a company report bad earnings or even good earnings and the stock does absolutely nothing, which is really frustrating, but there's a way to make money on that, okay? Even if the stock does absolutely nothing and it would have stayed at $185 where I, bought it, or even if it went down a little bit or up a little bit, I still want to make more money by betting that Facebook isn't going to have fantastic earnings. And basically I think that because, they're investing in the metaverse, so it's less likely that they're going to have some blowout quarter with some amazing ad revenue, especially because also Facebook has a lot of problems with Apple. There's a lot of security stuff going on, and there's a whole lot of issues with Apple. And basically, because they have these issues, they're less likely to have amazing earnings, at least for this quarter. Maybe they'll have better earnings in the following quarters, which I do expect, but this quarter, I don't expect blowout results. And for that reason, I opened up this position with a $210 sell call option. Now, typically, if you're a beginner investor, you might think, well, I need the shares. I need 100 shares to sell a call option. No, you do not. You can do something which is called a call credit spread. And actually in the last video, you can watch it in the description, I actually made a video on call spreads. Now I made a video about buying call spreads. This is very similar, just selling call spreads. Basically right here, I'm selling the 210 call option. I'm selling the 210 call option saying that I do not think that Facebook is going to rise to $210 per share. Now, if I don't close off this option, the problem is I have unlimited risk, because Facebook, let's say it can go up to like $300, let's say. It's not going to happen, but it could. Then I would be at a huge loss. Instead of being at a huge loss and risking unlimited risk by selling 10 contracts, I'm now also buying 10 contracts at $225 per share, basically saying, hey, the pain, if Facebook goes beyond $210, will stop at $225. So I am risking some more money there. I am actually increasing my risk by a little bit. However, this is very calculated risk. The delta is very low here. Delta, again, is the probability that the option will expire expire in the money, and Delta also explains how that option will behave. So for example, if Delta is 0.5 and the stock goes up by $1, the option is going to go up by 50 cents. So here the Delta is going to be very low because the option is so far out of the money. So $210 is very unlikely to happen in the next couple of days. That's why I decided on this strike. There's a couple other reasons that I covered in the Discord on why I decided to do this strike price. But basically, the main reason, it's very out of the money, and I protected myself with a $225 call option. Now, this total position is pretty simple to understand. Basically, I have bet that the stock is likely going to fall. I bought a put option and subsidized that put option. And then I bet that the stock won't rise. I sold the call option right here, the 210, and then I bought a 225 call option to protect myself. This position was basically a weekly trade. I do like to stick to weekly options because weekly options are awesome. You get to figure out what happens in that week. You get to collect some good income, and you get to see your results every single week. It's pretty awesome collecting a paycheck or basically getting paid every single week, then using that money to continuously grow your account or just use that money for your daily needs or your expenses like bills. So again, to recap, the most important information you need to know, and here are the best practices for also closing this position. I know a lot of people want to understand, how do you close a position? I do not understand, because some people make money, right? And then they don't know what to do. They get too greedy and they keep holding that position and ends up being a loss. Or they're just at a loss and they're like, wait, should I close this position now or should I roll it? Well, here's the simple truth, okay? Let's say that you opened up this position. Unfortunately or fortunately, this is an earnings play. And I do recommend that you typically buy options for earnings plays because although implied volatility is high, it's high for a reason because a lot of stuff can happen. So if you're going to buy call option or buy a put option or run this 4-option strategy that I'm teaching you right here, which I think is fantastic, you can make so much money on it. You want to do it before a stock has earnings, because when the stock has earnings, it can fall a lot or it can rise a lot. And you can make a decent sized or a pretty big bet, or at least a high volatility bet, that if it plays out, you can make so much money. And if it doesn't play out, you will lose some money, of course. You know, you can't have any good times if you're not ready for the bad times, right? You have to risk some money to make some money. You got to risk it to make that biscuit. But still, right here, you can make a little bet, right? $2,600, $2,650 is the bet that I made. And again, I opened up 10 contracts. You can open up one contract for $265. Way cheaper, right? Way more beginner friendly, way more suitable for a very tiny portfolio. But I made a $2,650 bet, and I think it's going to be about $5,000. And the way you want to close this position is wait until after earnings, okay? You can actually close that position before earnings. For example, I can close this position now, you know, and maybe I'm being greedy. I'm not the best trader in the entire world. You know, I don't always make every trade perfectly. I make my own mistakes, but right now I can come out with $700. My plan is to basically wait for earnings to happen, and then I'm going to see that this position will most likely go down even further, or I'm most likely going to make more money. Again, I might be wrong, but my plan is to basically hold, and this also creates a hedge against the portfolio, because let's say the market continues to go down. So if the market continues to go down, Facebook's going to fall down with the market, and this position is going to make some money. So this is a number of good things that you can do in your portfolio by buying put debit spreads. You can protect your portfolio, you can bet on a stock falling down, and at the end of the day, you can also make a lot of money, even if the stock doesn't do too much. It can just fall a little bit, and before earnings even happens, you can get out of that trade for a profit. Make sure to watch my option playlist. I have a small account trading playlist with so many videos that can help you for free. So make sure that you watch it right here on the screen, or check out my description for the Discord or the option playlist if you can't find it.